Troy, I see all sorts of articles that it's been a really, really whipsaw challenge 6 weeks or so for the hedge fund business. How is it? Is there alpha out there?
Yeah, but you're right. It has been challenging, particularly in long short equity, really starting since February. And what we saw is that, remember, and this gets back to some of the inflation concerns and where the treasury yield is now, is that, the industry was really positioned for, slower growth, potentially, less fiscal stimulus coming. And so they were overweight growth and stay-at-home names to some extent. Those have underperformed recently, and a lot of the value cyclicals have really screamed. And so it's been a choppy environment in long short equity. Last year was a very strong alpha year. This year's been a slight negative alpha year. So it's been harder in the equity part of the capital structure. That being said, if you look at distressed debt managers or those in structured credit, they're principally recovery/value plays. So those have performed very admirably through June 7th so far this year.
We could talk all about that, Troy, but really everyone wants to know about Bitcoin and your holding in the crypto asset, considering the fact that you have made such a big push saying that this is going to be the key determining factor in your outperformance this year. Where do you stand on that now, given China's noise around potential crackdowns, regulatory issues, and the fact that we're perhaps moving into a new regime of liquidity?
Yeah, so look, we step back and still look at the initial thesis, right? You still have tremendous money supply growth. The Fed is still expanding their balance sheet by 120 billion a month. M2's on pace to grow somewhere between 15 and 17% this year. You think of every central bank and every nation state is still in a debasement period for their currencies. So the macro environment is still very favorable. And as you were talking about before, it doesn't look like there's any urgency for the Fed to taper. They may announce a taper at the end of this year and start to taper sometime in early 2022, but that's the most likely path. And then from an adoption standpoint, again, we still think we're very early. You look at some of the high net worth or the wealth management platform products. Morgan Stanley's has raised $150 million already. You look at gradual adoption in the hedge fund industry and the asset management industry, that continues. And then lastly, we're still relatively early post-halving. The last halving was May 11th of last year. Typically, you have an 18 to 24-month bull market. So we still think we're in a bull market. Obviously, we had a very horrific correction, but we think the trend line is still up here over the next 3 to 6 months.
And you think there's a floor built into that, Troy? I mean, because a lot of people look at the current prices, they wonder about some of the institutional embrace of this and whether that's going to be enough of a floor to keep things from going lower.
Well, yeah, so obviously after the big dislocation we had, we built up a nice stability zone here in this 33 to 36,000 level. It will be hard to push meaningfully above 40 to 45 in the near term. But again, if you go back and look at previous bull markets, you had substantial corrections along the way. This one was obviously more profound. You do highlight a good point on the environmental concerns, is that may slow down some institutional adoption. But again, if you step back and look at your choices for how you play currency debasement, if you care about liquidity and you care about non-correlation, Bitcoin in particular is still a very strong choice for you, alongside gold and maybe to a lesser extent copper. But copper, of course, it's a very cyclical recovery play that's already rallied. It's up 100% over a very short period of time.
Troy, I want to talk about the big tech, big cap. We've got the Apple conference today, something that we'll be covering, of course, across all of the afternoon. Troy, there's a comfort factor for hedge funds to own those companies. Describe the intellectual process of hedge funds loading the boat on large cap profit-making tech.
Yeah, loading the boat's a strong term, Tom, because I think there is some distinction in which names they own. But the industry particularly is as long Facebook and Google as we've ever seen them. When you have great value investors like Seth Klarman with, 2 of the top 10 names are Facebook and Google, for instance, that says a lot. And, so the intellectual process is pretty straightforward. It's like, hey, we're going to be mean reverting here to a slower growth environment again after a big cyclical growth period. You have tremendous profit margins, tremendous cash flow generation. There's really no cost pressures in terms of, expenses, meaning it's not a labor intensive industry that's going to suffer from higher wages, for instance. And on a valuation standpoint, they haven't been cheaper relative to the broader markets pre-pandemic days. So, as hedge funds filter through their choices, if you're filtering for risk-adjusted returns, particularly in an environment that'll mean revert to slower growth. Those look like standout winners to the hedge fund industry.